Hey, mortgage coach community, Dave Savage here, and I'm with special guest Josh Mettle. We're going to focus on a quick conversation. We're going to try to do this as close to 10 minutes as possible around going from being a fee worksheet based loan officer who's quoting price, rates, and fees to delivering advice. So I've got Josh Mettles here today. Josh and I had a similar conversation last year. But this, there's big changes this year, and we're gonna come at it from a different place. So, Josh, welcome to the call, man. Thanks.
My pleasure to be here, buddy.
Good, good. Well, feel free to jump in as I go through a few slides, and let's have a conversation that helps loan officers go from price to advice. So one quick thought I want everybody to really think about is that 2015 is a real distinct year for change. And when you look at everything that's changing in our industry this year, there's some new compliance rules from the CFPB. You just look at all the rapid change with technology, with rates and fees. I think this is an important quote to think about. A good hockey player plays where the puck is. A great hockey player plays where the hawk is going, from Wayne Gretzky. And I think that goes the same for every top loan officer in the country. You got to go where the puck is going. And we know where the puck is going on some of these things. So first mega trend, and where we know the puck is going, is loan officers, buyers, realtors, everybody is living in digital more than ever. So being able to communicate at the speed of life is more important than ever. And this is a key stat from a presentation, a white paper that Price Waterhouse put out, that when you look at the percentage of customers who tell about their business, especially if it's a negative experience, when it comes to the lending industry, it's 75% compared to 45% in retail. So of all the industries out there, we have the chance to create the most buzz, the most referrals, but it can be good and it can be bad. And when you look at the types of reasons that people would say something bad, a negative communication, it would be around, misunderstandings around cost of ownership. So this is a quick hit on that. That when you look at 61% of the issues and concerns are around fees and cost of ownership. Another key insight important to recognize is that when you look at what really does a consumer want from their loan officer, when is it, just wow, I really appreciated that. Friendly attitude's important, knowledge is important, strong communication is important, but personalization is 41% of a positive experience. That's huge. And when you look at that, going from traditional to digital and how we can serve consumers at the point of sale, they really want the most digital value during the research, when picking loans, when researching options, when researching you as the originator, they want that digital experience more than ever. And when you look at the amount of loan officers and you look at the amount of borrowers that are living on their mobile devices, let's face it, millions of people are searching for homes with the MLS in their back pocket to the tune of over 55 million mobile experiences per month. So it's just massive. So, hey, Josh, before I get into one last mega trend and then we get into scripting and how to change the borrower conversation, anything you want to add to that?
Yeah, I mean, when I think about technology, I think about convenience. And one of the things for me that sold me on edge in the end was if I'm presenting 4 or 5 different presentations or proposals, with MI, without MI, 10% down, 15-year versus 30-year, and I'm trying to send that out to somebody on a mobile device that's got 5 or 6 attachments. It's literally impossible for someone to keep all of those things straight as they're toggling back and forth with 4 or 5 different proposals. So for me, as I was watching you go through that and talking about 55.7, million mobile users, Edge just brings a convenience factor to comparing mortgage proposals that is unparalleled.
Nice, good. Well, I can't argue with that, my friend. So another mega trend that I think every loan officer needs to recognize is that there's some pretty serious changes happening with our workflow. The way, the integrated disclosures, everything that the CFPB is doing. I mean, this beta that they recently released, which some loan officers have seen, many haven't, but this is a beta. I think it's pretty clear that the CFPB wants to make sure there's a maximum level of transparency for people that are getting into debt, that are getting a mortgage. So this beta, whether you like it or don't like it, It's their attempt to provide more transparency around pricing. And when you really look at the goals that they have with the new integrated disclosures, two pivotal goals are better comparison shopping and improved customer understanding and more transparency. And so when you as an originator look at the changes that you're going to be required to make as of August 1st, this is not like where is the puck going? This is exactly where the puck is going. You're going to have to show the cost of a loan over 5 years. That's a new conversation for every loan officer in America, except for mortgage coach loan officers. And you're going to have to show TIP, total interest paid. And so, that's not an easy conversation for most loan officers. And so I have loan officers, Josh, this is where we kind of start getting into some scripting. Every day they call me up and they say, well, everybody else is showing the fee worksheet. It's like they like Mortgage Coach. They think it's cool for some buyers. They like the fact that they can put an audio or video and they can really create some personalization and humanization around it. But at the end of the day, some loan officers still want to provide that fee worksheet. And so what I want to do really for the rest of this conversation is help loan officers change the conversation. And so if you were competing with a buyer and they were getting a fee worksheet, I want you to be really confident around saying, yeah, but that fee worksheet doesn't show cost over 5 years. And that fee worksheet isn't a comparison between two options. So Josh, how do you want to take it? Do you want to comment on some of that, or do you just want to get into scripting?
Well, I use that to my advantage. I'm always and have always in my professional career tried to figure out ways to be different. Tried to figure out angles, tried to figure out selling propositions, unique selling propositions that somebody else isn't selling. So when a loan officer tells you that they want to give a fee worksheet out because that's what everybody else is doing, I'm sitting here clapping because I'm going, great. I hope there's a whole bunch of you out there. Because I know that when you have a dialogue over the phone and you try and tell Mrs. Johnson the difference between 5 fee worksheets, and I send a video with an edge where Mr. Johnson, when he comes home at night, doesn't have to listen to what Mrs. Johnson regurgitates, but she gets to watch my video, and it's really simple that the higher interest rate LPMI option is the best option. That's what he should go with. It's a very clear communication. So I struggle with that logic that you would want to compete on the same plane as somebody else, and I would urge loan officers to try and compete on a totally different plane.
Yeah. Well, first of all, you just accomplished half the goal I wanted, because hearing that from you, and by the way, just to give people a little backstory, you're doing a lot of volume. If you wouldn't mind just sharing what market you're in, the kind of volume that you're doing.
Yeah, so we're in Salt Lake City, Utah, and we're off to a great start of this year. Last month we had our biggest ever submissions month for my teams. We submitted 95 loans into underwriting, and so hopefully we'll have about an 80 to 90 loan month, and should be somewhere in the 25 to 30 million range. So it's going to be a massive year.
So you're doing a lot of volume. The time that it takes for you to create a Mortgage Coach report. How much time is it taking you to go from price to delivering a Mortgage Coach experience to one of your clients?
It depends on what type of scenario we're doing, whether it's a purchase or a refi. Purchases are a little quicker. Refis, you have a little more data to entry. And it depends how detail-oriented the client is. Sometimes FHA is their loan option, and their options are going to be FHA with a buy-down and FHA without a buy-down, and that's just it. But sometimes when you get somebody who wants more options, it may take a few more minutes. But I created a video that was how to create a purchase TCA in 5 minutes or less, and I think I did it in 5 minutes and 22 seconds, and that included the video. So I'd say on average between 5 and 10 minutes. If I mess something up and really need to work on it, maybe it's taken me a few minutes more than that, but not much.
Okay, so I really wanted to make this as a training tool. So for every loan officer out there that you're watching this training and you're currently doing a fee worksheet, really pull it out, put it on your desk, look at it, and then think about how much different you are, how much better you are when where that number one is, that is the details. That is the fee details. Number two, that's the payment details. Number three, That's the cost over 5 years. Number four is showing cost over a different period of time. Anytime you say that, oh, I want to present something that's on par with the other loan officer, that hurts your competitive edge. And then the other piece, that for mortgage coach is that it's not uncommon that a mortgage coach like Josh will CC the realtor or the financial partner that referred him the business, and so they're in the loop. So that partner, if it's a purchase and it's a TBD, they know the options. You don't have to play phone tag with them. They understand what's being presented. Josh, if you could speak real quick to any value that you get by the way that you're delivering a borrower experience, the value that has to your referral partners and your realtors. Anything you want to add to that?
Well, I mean, when a realtor or a financial advisor, and I almost think a financial advisor has more to gain or more to lose rather, because if they refer you and you do a bad job, that's the next 20 years of commissions that they're going to lose. So they have to make a decision in their mind of what sort of an impact you're going to have or what kind of an impression that you're going to leave with that client. And every time they make a referral, in the back of their mind, whether you've been doing business with them for 2 minutes or 20 years, they got to think, what sort of impression is this person going to have when Josh interacts with them or with whoever interacts with them? So knowing that referring partner is going to have that thought process, setting yourself apart by setting a presentation together that shows all the terms, shows total cost comparisons, shows with undeniable evidence that one loan program is a better value over a specific time horizon than another loan program, and then looping the realtor in and saying, and my advice so that we can keep to exactly 5% down payment is that we ask for seller concessions. I've CC'd Bob. He's going to make sure that we structure the offer accordingly, and it just dovetails everything in nicely. You can't, you just can't do that with a fee worksheet type presentation.
Got it. So for everybody on this call, I want you to think about it. If someone's borrowing money, they have a loan officer, they have friends or family members that are in the loop on the decision. If they're buying a home, they have a realtor. Depending on how they manage money, they have advisors. And if you're delivering with a fee worksheet, you're leaving it to the borrower to explain your value, explain your options. But if you're delivering it with a mortgage coach, everybody's in the loop. So the thought I have here is that going from price to advice, going from fee worksheets to mortgage coach, it really is just training. It's just learning a new conversation. So for anybody that's struggling, I would just urge you, it's a new conversation with your borrower. You need to be confident and comfortable that you're right. You're delivering options, not just one loan. You're delivering cost over 5 years, and you're delivering an unparalleled level of transparency. So this is a quote that I love. I've shown this at a couple coaching calls, but I mean, I believe this. The illiterate of the 21st century will not be those who can't read and write, but those who cannot learn, unlearn, and relearn. And that really comes down to because technology is changing so fast that we need to learn new ways of communicating. I mean, like my kids, if I send them an email, I mean, it's like, what's email, Dad? That's something that business people use. I mean, they live on text, Snapchat, and Instagram. And millennial home buyers, they have different ways in which they require technology or in which they receive communication. They speak digital. They want you to deliver in digital. So, I mean, here at Mortgage Coach, we're dedicated to helping you guys. Hopefully everybody's listening to this training. You're coming to our coaching calls. We send out emails like this. You can see it on your mobile device. This is actually, I'm recording this in March of 2015. I had Darren Hardy, the editor of Success Magazine, last Tuesday. I'm going to have Tom Ferry, the nation's top real estate trainer, this coming Tuesday. And then, of course, Josh, one of the nation's, I think, best value-based, process-based loan officers in America. We've created that video. Gosh, it's been months since we've done it, but I know that over 1,000 people have gone through that video that we created together. Anybody that's listening to this call, I do want to remind you that not only is there a great video that will teach you how to go from price to advice, but I put in a number of links to scripts. So, how to create a great video, links to other scripts, links to other videos. Check out that homework assignment. So Josh, let's wrap this up so we can keep it brief and just a quick hit for Mortgage Coach. But any loan officer that's trying to make that shift from price to advice, what do you tell them?
Well, I remember there was a phone call with you when I was first into Mortgage Coach, and I'd done about 6 or 7. And I'll never forget it. I was walking through the airport, and I had to tell you that I just didn't think Edge and Mortgage Coach was worth the time, and I just failed to see value in it. And I always respected you for how cool and collected you responded to that shot across the bow. And you said, "Well, Josh, that means you just haven't done enough of them." and I was so glad that you took that way and you proceeded forward. You were like a heavyweight fighter that just took that one and just kept moving forward. And around 12 to 15 edges, I started seeing results. I started seeing clients respond back and say, "Hey, that was really impressive. I would like to schedule a follow-up time." And these were clients that were hard to get a hold of. These were clients that I wasn't sure I was going to get. And I started feeling like I was converting more. And not only did I feel like I was converting more, and maybe this was just a confidence thing. I mean, we all have those issues from time to time. I felt a draw towards a higher price point. And my price point went up, my average loan amount went up, my confidence went up, and it just works for me. So I would say if anybody's struggling with it, do more. Watch those videos that Dave's messaged. That's a master's degree on Edge if you just spend a couple hours watching those. And if you follow that, it's hard for me to believe you are not going to see the response from your clients immediately.
Right on, Josh. Thank you so much. And then I would say it's not just creating the reports and doing more, it's changing the conversation. You do need to change the conversation that you're really confident and proud that I'm giving you options, I'm giving you transparency, and all those other fee worksheets. That's loan officers not giving you the full scoop. Mortgage Coach and what I'm doing is giving you the full scoop on making a great informed decision. So, hey, Josh, thanks for making time to record this and share this with other Mortgage Coach loan officers. I'm grateful, man.
Anytime, Dave.
All right.